I want to read you a quote from a book I was reading recently that said something that struck a chord in connection with risk. It said, "Exploration with the application of innovation experience together with purpose does not come without risk and brings with it new hope for a greater prosperity for all those that choose to accept its ultimate outcome." A fitting thing to say for Christopher Columbus in 1492 on the island of San Salvador. But it seems that he and his crew knew a little bit about risk. I mean, could you imagine what they thought boarding ships from Spain looking for a shorter route to the trading markets of Asia, not really knowing if the world was flat or round? In fact, Columbus, when he died, right before he died, he tried to sell a theory to scholars in Europe that the world was actually pear-shaped. Didn't seem like a very optimistic view. But the primary elements of risk relates to the probability of uncertain future events and assigning a level of confidence of such events occurring. In the oil and gas business, in particular exploration, what we risk is the hydrocarbon system: source, migration, trap, seal, and reservoir. Source is the origin of oil. Migration is the migratory path that oil takes till it ultimately finds a trap and becomes accumulated. Seal is what prevents the oil from moving on, and reservoir allows a media to produce the oil from. But all of these elements are key in risking the probability of success of a working hydrocarbon system. I'm going to go through that in each one of our projects quickly, and then I'm going to roll into what I call the building blocks of future value for the company. This is a concession map of Belize. We have 19 neighbors that are all held on PSAs with the government. We're right there in red. This is our license block here, and here they're actually not license blocks. We call them territory areas, which are all contracted under the same PSA. It's 420 square kilometers. The northern area is Blue Creek, and the southern area is known as West Gallon Jug. All the black lines you can see, with the exception of some lines missing in this area, which was phase 4, are the existing seismic that we've acquired to date. As I mentioned earlier, we've acquired 231 line kilometers in a total of 4 phases of seismic. 2 reasons for this. One, the primary reason is that we wanted to get a better understanding of more of a geologic setting, followed by an increase in seismic density over prospects that we developed from phase 1 and later phase 2 to help de-risk the hydrocarbon system. And what we did is we came up with a total of 7 prospects and 1 lead. This is the northern block, this is the southern block, the West Gallon Jug Estate block. What we've come up with is 3 drillable prospects, A, B crest, and West Gallon Jug crest here, and 4 prospects, which are all the remaining prospects on the northern block with the exception of C North. C North is called a lead because it's bisected by the Rio Hondo River right here, which is the border of Belize and southern Mexico. Our PSA doesn't give us rights in Mexico, so we have to call it a lead. And then the lead of West Gallon Jug Max. The risking, back to the risk, of the hydrocarbon system is that we have what we characterize as 3 drillable prospects with a 1 in 5 probability of geologic success, and then we have the remaining prospects that we internally characterize as a 1 in 5.75. That one includes the lead. Again, the only thing that differentiates the lead from the others is it's, half of the prospect is in Mexico, but it doesn't really change its hydrocarbon system. I have to note that one of these drillable prospects, RPS gives it a 1 in 10, and I'll tell you why. That's the only thing that differs from our CPRs, other than that the other prospects of which we have not calculated volumetrics on have not been independently risked by RPS. We've asked them just to stick with A and B crest and West Gallon Jug Estate. The reason why we differ with West Gallon Jug Estate and A and B crest is West Gallon Jug Estate is here. It's right on the Guatemalan border. We do not have rights to shoot seismic in Guatemala. Therefore, they choose to call it a lead. This is an aerial mag survey, a gravity survey. Each one of these blue dots are where oil samples or producing fields where our people have undertaken a crude oil analysis that determined that these source rocks or oil generation depot centers really are producing the same oil amongst all these blue dots. And as you can see, we're right in the migratory fairway. Okay? So because this depot center plunges deep to about 19,000 feet in its center, where oil is actually generated, and given the absence of seismic, but the access to gravity data, we can actually correlate and see a plunging dip, if you will, to the southwest and to the northwest, which gives us confidence of the same risk of geologic probable success that we see in B crest and in structure A. The primary element of risk in Belize is the existence of trap. Some of you have heard this story before. This is a seismic section of Spanish Lookout producing next door. And this is a seismic section of our Blue Creek prospect. Look at the similarity of the trap geometry of the Upper Cretaceous intervals here and here up against a fault system. We see a similar fault throw between the two. We see similar rollover at the top to the west. We have every reason to believe that the traps formed in Spanish Lookout, caused by the same tectonic activity in the region, given its proximity to Blue Creek, likely formed at the same time. But the basic element of risk is this. Were the traps formed in Spanish Lookout prior to oil migrating from its source, and as such you have an accumulation exist, or were the traps forming as active migration from the source was migrating up to this prospect area and oil seeped off through leaking fault planes and so on? Or did the traps not form at all, and all we have is residual oil and it's migrating on past? I'm here to tell you that there's no technology out there that's going to answer that question until you drill it. None at all. And the probability of geologic success of 1 in 5, a 1 in 4.5, a 1 in 5.5, really in 2D is as good as it gets. It doesn't get to look any better than that. Okay? So that's the primary element of risk, and that's what we're playing. Now, this particular slide, I wanted to show you something. This is the Mike Usher #1 well. A recent trip to Belize, our friends from St. Bride's took these pictures, and the Mike Usher #1 well is still producing 1,000 barrels a day. Evidence of a very active working hydrocarbon system in our region. Our recent phase 3 CPR has concluded that although we took a downsize in Prospect A, now remember, when you shoot seismic, it doesn't necessarily tell you what to do. In my experience, it often tells you what not to do. And think if we had drilled a well further towards B crest to the south, we might have drilled a dry hole and put a condemnation point in there. We wanted to make absolutely sure we understood the size of that structure to de-risk it further, to increase our chances of discovery. So although we reduced the size of A, we picked up. We reduced A by about 74 million barrels equivalent in size, but in West Gallon Jug picked up on a P50 scale 113 million barrels, which gave us a net add on the P50 scale of 329 in total. And when you put that on a multi-success case, multi-discovery indicative success case, it increased our net present value for the 3 prospects about $1 billion to $8.3 billion. Again, this is a picture of our base camp, our forward plan out there. Our base camp is days within being completed. We have actually completed our phase 4 seismic. It's being interpreted. We're going to be generating an update to the CPR out in the next month, 6 weeks. We plan to start exploration drilling in the coming few months. We're hopeful that we'll start our first well, B crest, in the next 2 to 3 months. We're hopeful that beyond that, we'll follow with a second well. and then hopefully in the next 12 to 18 months have 4 wells down in Belize to fully test these structures. This is actually a picture of our team together with the Honorable Joy Grant, Minister of Energy, together with her team, our partner Alistair King, located in Belize, as well as George, and our country manager Bobby Stick. Or, pardon me, Bobby Hall. He's like a brother. On to Denmark, New World in Denmark. Again, you've seen the 2 license areas. We're at 2.6 million acres between the 2 license areas located right here. Gives you an idea of our proximity to market. You know, gas in this region is still selling at about $9 per MMBTU. In other places in the world, that's a number over 4 times greater. In the U.S., Henry Hub's at about $2.62. So we've got an incredible demand out of Europe. We'll have no problem selling our gas out there. These 2 license blocks exist in the what's called the Permian Basin. This is the southern Permian Basin here. This is the northern Permian Basin. Danica Jetland's on the southern margin of the northern Permian, and Danica Resources on the northern margin of the southern Permian. We have shot a grand total of 134 kilometers of seismic in Jutland. We did it all Vibrasize with good data quality. And what we've done is we've further hydrated the existence of 2 Triassic targets, 2 Triassic prospects that we now have a 1 in 8 on in terms of probability of success. The AVO modeling confirms a seismic response to gas. What that means, in our opinion, is you see here, seismic response to gas, or AVO, is described as a direct hydrocarbon indicator in our minds, and I think in RPS's mind. It's really not a question, is there gas there? The real question is, how much? So what we've done is we've agreed to further shoot additional data to further delineate these prospects. In addition to the 2 Triassic prospects, we've come up with 7 Zechstein carbonate prospects. And you can see here on the seismic section, the data quality is quite good. What we're looking for are these little carbonate buildups, and they seem to be a long trend, and they appear to have nice structural relief where accumulations through the migratory process will trap and seal. Our way forward in Danica Jetland is we're going to shoot another 55 line kilometers to high grade the Triassic plays, again with an effort to get down to a 1 in 5, and in the Zechstein prospects to shoot a 75 kilometer 3D survey. Okay. The risking on the Triassic prospects right now is a 1 in 8. You can see the biggest elements of risk or source and migration in both play concepts. But again, upon acquisition, interpretation, we think that we'll be able to reduce these risk levels, hopefully down to a 1 in 5 in the Triassic and about a 1 in 8 in the Zechstein. Remember, we have 7 plays in the Zechstein. We get to a 1 in 8. So it looks like we're going to have a good shot at doing real good. We have 2 plays with 2 horizons per play, 2 prospects with 2 horizons per prospect. In the Triassic, a 1 in 5 or a 1 in 4.5 closes in on the chances of us doing good out there as well. This is the results of the CPR that's been recently released and completed for Danica Jetland. Effectively, what we're looking at is a best estimate of recoverable prospective resources at about 3/4 of a TCF and 60 million barrels, representing about 1.3 billion PV10 in value. On to Danica Resources. Danica Resources is right here in this little red block. It sits just on the far west of a very, very productive fairway starting in Poland, going across Germany into the Baltic Sea, and it just kind of curves right around up into the Permian, where, you know, a massive amount of production has been produced out of the North Sea and the Baltic region. We have on the Danica Resources license block a number of prospects. In total, 22 prospects and leads and 1 drillable prospect. It's a very, very prospective area. You can see them all broken out here where we have 15 Triassic leads, 4 zechstein leads, 3 carbonate sedimentary rock leads, and the Owls prospect right here, which can be drilled onshore from Owls Island. This gives you a little picture of the edge of the southern Permian and the Owls prospect right here, but it more displays all the data available to us. We reprocessed 590 kilometers of pre-existing seismic, and that was concluded in an interpretation of which we used to set up the design for the 108 seismic shoot, which will take place in August. What we're looking for are these large zechstein and Rodligan structural highs. We're also looking for the same in the Triassic Bunter and Tonner sandstones. So to give you a feel of the Owls prospect, what we're looking at right here is a raised horse block where we think up to 1.4 TCF and about 97 million barrels exist. According to our competent person, that's a conservative number on the P50 scale. So risk-wise, they're looking at, on Owls, a 1 in 8 in the shallower zechstein and a 1 in 9 in the deeper Rodligan sandstone. We can actually go out and shoot additional seismic in an area where we go from land into the beach and offshore at a cost of about $6 million. Or we can take about $4 million, $6 million more and drill a well, know for sure. Usually the math behind justifying that type of operation is you usually take about 60–65% of the dry hole cost of a well and then divide it by the dollar per kilometer that you're going to go out and acquire seismic. And if you have the number of kilometers required to actually confirm what you're looking for, or at least give you an idea what's down there, you go for it. In this case, it's almost a wash. Our competent person said, well, you know, if you've got the resources, it's worth the price at 2.4 billion P50. So there's your 2.4 billion P50. 330 million barrel oil equivalent tested from a single well is a serious exploration play. Okay. This is our future seismic program for 108 in the Baltic region. This is all onshore. We've recently scouted it, gone to the different islands, and that'll commence in August. Now I want to roll into the building blocks for adding value for our company. What we're going to do is continue to de-risk our prospects and projects through additional seismic operations where we'll complete additional CPRs at the end of each work program. We've gone through a reduction in CapEx process for our Blue Creek exploration program down in Belize. If you recall, the original obligations were $10 million a well to earn into 100%. What we've since done is we've renegotiated the Blue Creek farm out agreement to go from $10 million wells to $4.8 million wells, reducing our CapEx requirement there to 14.4 million. Now, what are we doing here? Okay, what we're doing is we're saying to ourselves, if we're filled with oil to the base mid-Cretaceous at 5,500 feet, wouldn't we rather shut down there and run casing and put it on production and produce and generate cash flow? And our partner agreed. So the earning obligation is 3 wells to 5,500 feet, about 4.8 million, or the 14.4 in total. And after the conclusion of the 3rd well, we'll drill a 4th well to the base Jurassic, which is the 11,300 foot well, the $10 million well, out of cash flow. So all in all, that's a 28% reduction in CapEx. What we're also doing is we've got significant news flow coming at us to the end of 13, and I'll give you a feel for that as well. With the readmission process complete and drilling ongoing, we are, and I'm going to be very careful with my words, we're in advanced discussions with a farm down candidate, which we hope take us down equal to the number we've just reduced our CapEx requirement in Belize, who will offer up not just funds but also services in kind. We also have CPR updates coming at us here in the the second half of this year. Phase 4 seismic interpretation, followed by a CPR update. We also have the Phase 2 Danica Jutland update, which is the 2D AVO work over Block 108 over the Triassic plays in the second half of this year. We have the 3D survey coming at us, which will come at us in Danica Jutland in the second half of last year. We'll also have the Danica Resources update from the 161 kilometers we plan to shoot this summer, which will also come at us at the second half of this year. You guys have seen our news flow with our CPR, so you understand really the context of which it's presented and the independent nature that RPS maintains in their documents. Our plan is to drill 4 wells in the next 18 months in Belize. Obviously, each well requires an election point. But, you know, given that we're successful in our wells, we'll continue on with our drilling campaign with news flow to follow, logs to surface, petrophysical interpretations, well completion, well testing, reinterpretation of the subsurface, and if subject to the well's results, we'll revise the reported volumetrics and values. We'll continue to maintain our pipeline of projects, as Peter said. Projects in a pipeline have a shelf life, and you know they're relationship driven, based on who we are and our experience, and their interest in pursuing us, as well as ours in pursuing them. But you know, it takes interaction. It takes being there, and there's a lot of opportunity out there. We'll also maintain our virtual data room, and continue to allow people to come in and look at our data that are qualified for the possibilities of farming into both Danica Jutland and Danica Resources. And we also have had a slight shift in our one of our process of building value in the future, and that is we've identified and continue to identify exploitation opportunities or early oil opportunities. Many of you may have heard me say at the very beginning, you know, look, the reason why we didn't go out and acquire proven developed producing reserves was because in the very beginning, was because when you go out and buy proven developed producing reserves, you're generally asked to pay full price. So what can we offer you in terms of upside? What's happened to oil price in the last year? And if you're paying full price and you see a sagging oil price, what happens? So effectively, we shied away from that because the entry fee, if you will, in late-stage exploration, and the multiples which we can provide if we get it right, provide you with the encouragement of upside in the future, the prosperity that you're all hoping to achieve from our expertise. However, what we've seen here in the last, you know, I want to say 2-3 months, is a sagging period of oil price. We're now in the 80s. A lot of projects were financed at $100 oil that are distressed. And what we're doing is looking at those. And what happens when you acquire something like that? Usually a distressed asset often will be released on flat price decks for generally the cost of the debt if it's very distressed. What upside can we offer there? What we can offer there is we can offer a, you know, an increase in oil production by exploitation opportunities, secondary recovery, closing the performance gap. You know, performance gap is, you know, you can actually mathematically calculate what a reservoir will produce under ideal conditions when you know that, and what it actually produces, the difference is the performance gap. And you work from the reservoir to the tank, or the tank to the reservoir, and close that gap, building, if you will, a database of the optimum, maximum dollar increase in value per dollar invested per operation to close the performance gap. So that's something we're looking at as well. If oil price continues to sag, we'll step that up potentially. Another thing acquiring a producing or near producing asset does is it strengthens your apparatus. You know, it turns you into a company which forces you to learn how to not only produce and close your performance gaps, but to transport and sell your oil, to account for it, to build a team that's stronger than what we have today, to become a more viable concern. And then if you see a turnaround in oil price and 40 exploration opportunities out there, some with varying higher degrees of risk than others, we become a going concern which is quite attractive and quite diversified. On the very first slide, you saw us what our mission is, you know, to build a diversified oil and gas company. So to wrap it up, basically, we have under our belt our 3 projects today. We have a well thought out plan to add value, and it's broken out in the CPRs, and you're willing to question any of us here tonight. And they've all been assembled on, if you read through the documents carefully in the CPRs, very, very well thought out and sophisticated transaction processes. We're very protected. We have a strong team. Listen, this is what we do. We're passionate about it. You know, we're not out promoting anything. We're out, our intention here is to produce oil and gas. We've created material exposure to upside in doing that. So, you know, with the high impact of news flow to our shareholders and the fact that we're focused on minimizing dilution through reducing cost, considering farm-in partners, and working together to come up with solutions to further add to our funding strategy, what we're planning on doing is to end up as a company that delivers maximum value to its shareholders. At this stage, we're well funded and really well supported by all of you who are our shareholders and stakeholders. So I'd like to wrap it up and just say thank you all for all your support. What gave rise to this investor night tonight was really to thank you. We couldn't have said this in 20 minutes with 10 minutes of Q&A, but also to acknowledge my fellow directors, all of our advisors and contractors who are amazing, who have been a huge part of our success, and all of those that have put up with us for the long hours away, my wife, but mostly to you shareholders. Without you, we would be nothing, and we thank you for your support. We really do. Thank you very much.